Okay, I think we're live. I'm going to get a check on that. Are we live? Good thumbs up.
Good to go on. All right.
We're live. Perfect. All right. So good to see some of you again. Nick and John, we've had a chance to meet once before. Luigi, welcome. Going to just kind of set the stage for why we are here in case we have some new folks joining us for the first time. And, you know, really the purpose for us being here is that Messari has been working on what we'll call quarterly reporting, similar to what we see in a traditional world, especially in traditional finance when evaluating companies and these sorts of things, but at the same time, very, very different. You know, it's like there's nothing traditional about what we're doing here, especially when it comes to reporting. The point is that capturing events and capturing data in different time series allows us to evaluate, you know, really how things are going, whether that be through certain data, certain trends, or simply the growth strategies that any endeavor is putting into place. And that could be companies involved. It can be enterprises utilizing the technology, as well as the community itself, you know, driving it forward. So really that's why we are here, and we are revisiting now the first quarter of 2022, subsequent to having covered the last quarter of 2021, which was a pivotal quarter for Avalanche. A lot going on. So the second quarter, or the first quarter of this year is no exception. It's the same story. We're not going to boil the in an hour. There's a lot to cover. So hopefully we cover everything. You know, we're going to try to have a conversation that if it's first time to this call, or your first time kind of looking into what the Avalanche ecosystem is and what's going on, we want to be able to provide some insight there, all the way down to folks that are really, really deep into the community and developing. Hopefully, you know, we can provide some insight at a more deeper level. So, you know, that's why we're here. And, you know, today we're really going to talk about you guys' introductions, high overview of what we're seeing over the first quarter, and that involves the network at a high level. What's going on with the network specifically in terms of usage, getting daily transactions, and these sorts of things. That's more quantitative, and then it's sort of trying to tie that then to the actual ecosystem. And sort of bringing it back to more qualitative manners that fundamentally we can start to think about the value that's actually coming to this space, right? It's easy to look at like price, market cap, and be like, oh, it's valuable, and see this data. But what we're trying to do is really flush out, like, what's the driver? What's fundamentally happening here that's driving everything, and what are the efforts that everyone that's involved? How is that driving? So that's ultimately why we're here. I'm a research analyst with Messari. Have the honor to cover the Avalanche network and ecosystem and cover it on a quarterly basis. So that's about me. But you know, from there, let's just start with a quick introduction of who you guys are. You know, who Ava Labs is. And then tied into, like, what is Avalanche for those that are just completely unfamiliar in your relationship with the Avalanche network.
Nick, you want to kick it off with you introducing yourself, and then I'll go?
Sure. James, thanks for having us back. Nick Mussallem, so I'm the head of product at Ava Labs. And so my teams are really focused on the road mapping strategy, product strategy, competitive analysis. And then we have a project management team that leads the execution of those. We have a very talented design team that takes that strategy and makes it visual and really considers the user experience. And then we also have a product analytics team that really kind of tells us how we're doing once we take things out to market. Yeah, so that's a summary on me and our teams.
John Nahas, Vice President, Co-Head of BD, oversee the BD team at Ava Labs, covering kind of 5 verticals: DeFi, GameFi, culture and social, so NFTs, institutional capital markets, as well as exchanges and wallets. And we've got Luigi here from the DeFi team and Ed on GameFi. So I'll let Luigi introduce himself.
Yeah, thanks, John. Hey, guys. Luigi DeMeo, head of DeFi here at Ava Labs. I apologize in advance for the video and audio quality. But yeah, just span across BD and strategy of all of Ava Labs for DeFi and help growing this ecosystem as much as possible.
Can we get Ed in here?
I'd say not yet. We'll
right.
dive into.
We'll let Ed introduce
a
himself
little
a
bit.
little later.
Yeah. We'll let it once. We're limited to the number of folks that we can have on call, so we'll have to bring people in as we get into deeper dives into specific topics. So so I guess really quickly to any of you, what is Avalanche? We've discussed this before, but again, for anybody that's new, what is it, and what is Ava Labs' relationship to it?
Absolutely. So Ava Labs, where we all work, is the firm that created the Avalanche blockchain. Now Avalanche is an open source layer 1 blockchain. So Ava Labs is a service provider to the Avalanche Foundation. We help with BD, with marketing and development on protocol level, as well as a lot of other work that we do with enterprises and partners. Avalanche, as most of you know, is a new layer 1 blockchain launched in September of 2020. Avalanche utilizes a novel new consensus, which is the Avalanche consensus, which allows us to achieve speed, high throughput, and the entirety of the network is actually very eco-friendly. So based on a recent expert study, the entirety of the Avalanche blockchain utilizes 46 US households worth of carbon, which is really low in the proof of stake family relative to some others in our group, and infinitely more green than the proof of work chains, of course. Avalanche has a multi-chain architecture. We have an X chain where you're able to create, mint, and burn assets, limited business logic. We have a P chain where validation and delegation occurs, but also the ability to create permissioned or permissionless chains, what we call subnets, which I'm sure we're going to dive into a little bit later. And then, of course, our C chain, which is our EVM-compatible smart contracts chain. That's where a majority of the action that you see in DeFi and NFTs is occurring. So think of us, we're an L1, but in some capacities, you can even think of us as a layer 0, allowing for a true Web3 economy to grow and to see the transfer of value continue.
Great. Makes sense. Okay. Well, thank you for the introduction. So let's kind of just move into, again, why we're here. And it really sent around Q1 of this year. So I'm going to share my screen. Hopefully, we might see all of us for a moment. Just let me know when you see this sort of report in front of you. Good on that?
Yeah, we can see it.
Good to go.
Okay, great. All right. So as I mentioned, we are now more or less tracking in a 90-day interval the development and progression of the Avalanche ecosystem, the Avalanche network. Sort of very quickly revisiting the fourth quarter of 2021, because while we can always just look at a snapshot of the last 3 months or an even quarter, there's always a relationship to the prior quarter that we need to bring into the discussion. And one thing that we'd asked last quarter, because it was an explosive quarter at the end of the day, on all given fronts of every metric that you can evaluate, and every partnership and everything that was going on in terms of any given growth strategy. We asked why, and some things, are not in this report. And John, you had mentioned importance, and we spoke about it at length last quarter about one of the that is important to anyone that will engage with the Avalanche ecosystem is the eco-friendly, carbon footprint that the blockchain leaves. And in this quarter, there was actually more data that came out about that, and it's not in this report because it's not easily tied to the data that we're evaluating. I just wanted to call that out, and that it is a big reason for folks to want to use this particular platform, right? That said, there were many partnerships executed and things that were basically in the works that as we headed into the first quarter of 2022. And the narrative really that I took away from this first quarter is that there was continued growth. And what I'm kind of showing here right now, and we'll step away from this, is what the report is all about. And I just kind of want to share with the audience what we're trying to do is give any reader key takeaways of the quarter, and provide some data, provide some background on Avalanche itself, and ultimately tie it back to anything qualitatively going on. Sorry, I'm jumping around here. So just a preview of the report itself. But let's focus more so on the data that's within the report itself. Oop. I want to make sure you all can see this. That the State of Avalanche Q1 2022. Is this visible to you all?
Yeah, James, we can see it. We're on the Avalanche key metrics summary page.
Perfect. Okay. So as I mentioned, we did see continued growth, and in the report, I refer to it, I think, in one spot as modest growth, but that's really compared to the fourth quarter, right? When you see network usage and network financial metrics growing at 500% or 600% and so on and so forth, and I think in some cases into the thousands of percentage points. Q1, we saw continued growth, but not like we saw in Q4, but calling out that it's still growth. And what stood out to me was continued growth in active daily addresses, so just regular interaction with the network. And we saw a 33% increase in that metric, as well as daily transactions. And one of the other ones that stands out to me again is revenue. We saw a 72% increase in revenue. And from a valuation point of view, that actually put downward pressure on what we call the price to sales ratio, which suggests, it's not perfectly vetted from the the financial perspective on the complete meaningful point that this metric has, but relatively, when you look at it across the space, there is some insight from it. And what we're leading to is, again, is always the question, or as to why. Here's the Avalanche address growth, and of course, we see over the fourth quarter amazing growth. And then we get into the new year, and it was actually in January that we saw an all-time high of active ad growth. And there was a statistic in there that the first week of January actually consisted of more activity than all of October. But since then, we've sort of stabilized, right? So that's the other narrative, is a lot of times what we see in other networks is a lot of growth, and then it subsides, right? It reverses course, and it's volatile, right? And while there's some volatility here, we're still seeing some stability in that. Well, actually, I shouldn't say some, but quite a bit of stability in activity. Similarly, it's the same with transactions, daily transactions. We're seeing an upward trend there. And we have plotted here against that transaction fees. So I wanted to kind of start with that as we think about why the continued growth in activity, daily transactions, and also, interestingly enough, what's going on with these transaction fees. So I'll come back to that, but in my finding was, and you guys can speak to this, is as we crossed over into the new year, there was the launch, the unleashing of the custom EVM subnets. I think that's part of what we're seeing here. Also, I had seen some releases of Apricot. So, but first, if I may ask, what is the importance of the EVM subnet? And there was a JSON file that was also released that I believe made it very easy for folks to develop and create their own EVM custom subnet. Can you kind of explain a little bit about that shift and what that means?
James, I'll turn this over to Nick and then to Luigi to add on to the subnet. But real quick, just want to recap some of the important things that you highlighted. Is that we've seen sustainable and consistent growth, right? To your point, there's usually a burst and then it tapers off. We've seen a doubling of transactions. We've seen continued usage. We've seen continued growth with new applications continuing to grow, new innovation on the chain, new projects, new teams building. So that initial kick that we got from Q4 has really continued into Q1. And now I know we're going to discuss a lot of the things that we have coming that came about in Q1 that are really going to propel us in Q2. But I think it's a really important metric, right, to highlight that there's a consistent and sustainable growth in users and transactions and in partnerships across the board. But to your point on the EVM subnets, Nick, do you want to jump in?
Sure. Yeah. So, we're at a very exciting time where we start to see GameFi really start to explode on chain. And with the advent of any kind of high transaction, high throughput application, you're going to need to be able to horizontally scale. And subnets, of course, are our horizontal scaling solution. It's been a very exciting quarter as we've launched DeFi Kingdoms onto that subnet. And so as we start to do this, we're starting to tackle a lot of the questions around subnets are there. They're ready to be used. You can deploy them very easily. There's a ton of documentation on them. But there's a whole satellite of utilities that need to be there in order to properly support subnets, which is why we're moving into the development of Core, and which is our wallet experience, which is going to have support for all subnets, which we'll be launching very soon, as well as Explorer support, right? So each and every subnet needs to have its own Explorer. So we're building out the mechanism for really to launch these subnets, but when you launch them, to also launch the utilities around them, which also include things like APIs and RPC endpoints that are needed to successfully run them. And so that's what we're seeing around subnets is we've got the baseline technology there. We're starting to see rapid usage of it in very innovative ways. And so we keep really kind of making it smoother and easier for the builders and also for the users to access them and engage with them and really leverage other kind of utilities to get the most out of them. And that's the focus in Q1 and then going into Q2 as well.
Luigi, do you want to touch upon kind of the importance of EVM subnets, of course, in regards to DeFi and everything else?
Yeah, I'd be happy to. So I think Nick touched on it well. Subnet EVM allows you to deploy a subnet, one line of code. It's an EVM-based subnet. So what this allows is applications to deploy on the C chain, the Avalanche C chain, where a lot of our activity sits. And once they get to a certain level of activity and require more transactions and throughput, they can easily divert into their own subnet, right? Once they've built a community and kind of naturally and horizontally scale the network. What that does is two things. It allows the transactions on the main chain or the C chain to go down and fees go down, but it also allows a overall network throughput to go up, right? So this is this is a way of horizontal scaling. Just to touch on the address chart a little bit, just to give a little context. I think it's important to look at those numbers from a relative basis, right? Crypto in general topped at the end of November. And since then, we've sort of seen across the board, whether it be Bitcoin, Ethereum, all chains, Coinbase earnings, across the board, we've sort of seen a stagnation since that time period. What's important for Avalanche is Avalanche was able to experience explosive growth in usage and retain all that usage during this time period. And I think that's the key, right? People came for new incentives, especially as it relates to Avalanche Rush and DeFi, and they stayed. And I think that's an important component to think about from that standpoint.
Yeah, definitely. That's, again, one of my takeaways is, and by the way, as an analyst with Messari, like I'm really not in the community. Like I'm not as far down as everybody else probably is when it comes to the Avalanche ecosystem. And my job is simply to look at data, try to understand it, look at trends, and see what's going on there, and let it drive the discussion. And the takeaway and narrative for Q1, was again continued growth and what I am referring to as stability. And I see it as a potential foundation for the next potential wave of growth, whether that come through NFTs, GameFi, enterprise, commercial uses. We'll see, but that was my takeaway. So I echo your sentiment about that stability. One of the things, and I wanted to talk a little bit more about vertical scaling, but we probably don't have time to go that far into that topic in particular. But really quickly, I do want to revisit what we see here in the past. There's a lot of volatility with the daily transaction on average, up until the point where there was a release of Apricot. And after that point, and that was right here. After that point, what we saw is, I think, an actual impact from that release. And I think that's very interesting to see. And I would call this period of time very stable compared to what we saw in the past, especially at a time when daily transactions on average are going up. A couple of statistics about the daily transactions, by the way. On average, Avalanche is approaching about 74% of Ethereum's daily transaction on average on daily. But there were times where it was reaching about 90% or more, a little bit more than what Ethereum was processing on any given day. Meanwhile, again, transaction fees stabilizing. That said, there is still a little bit of an uptrend that's moving in tandem with network uses and transactions. This all happening now at the same time as subs rolling out. So should we expect to see the daily transaction fee continue to stabilize and if anything, reverse course as more subnets are launched?
Yeah, so James, I can jump in there. So absolutely. I mean, I think of what you're seeing a lot in the increase of transaction has a lot to do with GameFi and just the nature of the bulk of what comes through there. The kind of horizontal scaling work that's done as a part of Apricot in the 5 phases really focuses on those things, which is how do we take the mainnet, right, the original mainnet launch, and how do we make it faster? How do we reduce the fees? How do we make it more stable? How do we improve liveness? And so that's the focus, and we'll continue to focus on that. But as we start to see other projects that come in and say need their own subnet because they want to have specific functionality that maybe is around lower fees, higher throughput, and they're starting to use things like precompiles that are specific to gaming. Well, that will allow them to achieve these things very easily. And when those games start to move into the subnets, you'll start to see congestion on the mainnet drop, and then you'll start to see fees In summary, the continued focus on Apricot in the horizontal scaling of the mainnet implementation, plus the advent and the maturity of subnets, will have both of those effect of, faster transactions, lowering fees, and also providing scaling solutions.
I think it's important to add on to Nick's point. As you mentioned, fees have gone down. They are ticking a little bit up as usage ticks up, but I think Avalanche as a platform, prioritizes safety and liveliness above any and all things. Yep. So in this respect, we are taking a very conservative approach, right? We would rather have a little bit higher fees, but have the network continue to run without any interruption, without any downtime, without any issues, because ultimately that's the goal, right? Is that you need to be on 24/7, 365 to keep up with this existing market. If we were to be a little too aggressive, we could end up having some issues, as we've seen across the board with others, and that's just not the attitude or the stance that we would like to take. We'd rather be on the cautious side, on the conservative side, and work to bring down a little bit of the transaction fees down gradually to a comfortable spot that doesn't affect network usage.
Yeah, that makes perfect sense. And I mean, look, I think with any of these networks, there's always these trade-offs, and there's a responsible way of rolling them out. It doesn't just happen overnight. And so there's a strategy to making it work with a long-term vision. And that's what we're going to track. Again, that's why we're doing what we're doing here, right? We're going to be able to then now next quarter continue on with this trend and see, and I bet, I mean, we'll see with the number of subnets that launch and how much activity from each, what sort of impact that has. But at the end of the day, we still know that vertical scaling and horizontal scaling is still underway. So, and what we're seeing now is more of a stable, I guess, trend, and of course, a strategy in place to balance it all. So I just found this very interesting. I found this chart and data very interesting. Now, really quickly, I do want to dive into what it means in terms of revenue, where I think some folks out there are concerned about, well, if the transaction fees go down, then that means there's less revenue to the protocol. But I don't think that's necessarily true. I think that's a bit of a to be determined. But I do call out in this analysis here that there's clearly a relationship between the value of the network versus its daily revenue. And so if daily revenue were to go down as a result of subnets, and there is a relationship that holds to the value of it in the short term, that, I'm concerned that the value of the network is going to go down. But the benefits of a subnet, correct me if I'm wrong, is, of course, in addition to being able to scale and thinking about it long term, it opens up not only use cases, it will allow for the ecosystem to expand in other ways that will drive additional value. And one of those other pieces that I think about is infrastructure itself. So every subnet will participate in validating the network. So I would expect that while transaction fees go down or stabilize, or however that will look, we're going to see an expansion of the network itself, right? So the number of validators going up, the distribution of stake further moving about it and being more diversified. Is that fair to say? And question one, and then question two is, if that is fair to say, what does that mean about the value of the network, in your opinion?
Sure. So John, why don't I kick this off, and then you can jump in. But so I think, strategically, we don't feel like we want the cost of using the network to have to go up in order to drive underlying chain revenue, right? Or the values. Mm-hmm. So our goal is always going to be to make the chain affordable, right? And as we make the chain affordable, we also want to be able to scale it. And these are the hard parts, right? How do you scale horizontally? How do we achieve that? We're achieving that with subnets. So we really will just keep scaling the network horizontally, providing the necessary utilities for builders to get to market affordably and quickly and easily. With things like explorers and wallets and RPC endpoints and interoperability between subnets to subnets and subnets to mainnet and subnets to other chains. And so if we feel that if we can provide all of that value in an easy to use package, then we're going to be kind of giving the users what they really want, which is a very affordable chain that also scales.
Right. Got it. Okay. Well, I think we've got into that enough. It's an important trend that we're seeing. It's an interesting thing. There's a lot of chatter out in the world and outside of the community, of course, with other communities that will point these sorts of things out and have concerns. But it's not. I think if you just take a step back, think about a term and what is actually happening here. It's really interesting in my opinion on that front. So, and I think everything that you said right there, makes sense of the direction of usage, and really its value will come from its ability to scale.
And James, I'll just throw in real quickly there that every validator that validates subnets have to be validated. Really, the kind of magic number is no less than 5. Each validator has to stake a Vox, right? And we didn't want to have to enforce that every subnet used a Vox as its native token, because that's taking flexibility away from the builder, which would have been an obvious choice in order to increase the usage of the underlying token. But we think that there's a bunch of other kind of network means from having subnets that will increase the utilization of a Vox and the underlying tokens that are launched on these subnets, and so that is a whole growth ecosystem.
Yeah, for sure. And again, I think part of that will show up in the development and decentralization aspect that we also, as far as an overview in our reports as well. So it'll all be tied together. It'll be interesting to see. We'll probably talk about it more next verse. So. Okay, well, thank you for that. That's kind of like getting into the network overview aspect of what we're looking at quarterly here, and we could spend the entire hour discussing all of these things and going even further. But since time's clicking on here, I do want to move into now the ecosystem itself and developer activity. So. And then I think from here, we'll end up diving a little bit further into DeFi and GameFi, and we'll bring our GameFi folk onto the call. But really quickly, I just want to point out that, over the course of Q1, we did see a pretty significant increase in core developer activity. I suspect that it has everything to do with everything that we just talked about, including EVM custom subnets, and as well, I think some new incentives in play here, and two of those incentives were referred to as the Multiverse Fund, or I don't want to call it, but Multiverse Incentive Program, and the Culture Catalyst Program. Can you guys sort of just give a high level of what each of those programs really represents and what you're going after there, and sort of the outcome that we've seen so far, right? Any partnerships that have come out of those programs, and where there's some traction?
Absolutely. So I think, as we remember from Q4, Rush is really what started kind of a lot of the push for us to grow. That was a DeFi incentive program. We've now moved on to both the Multiverse incentive program, which is about $290 million worth of incentives to support the growth and expansion of subnets, as well as a Culture Catalyst, which is $100 million to support artists and creators to kind of build or grow their fan base and launch assets on Avalanche. A key caveat here to keep in mind, something that Avalanche focuses on, or that we focus on, is incentivizing the user. A lot of people give out grants, a lot of people do a lot of things. Our core belief and the way we look at kind of growing adoption is we want the best teams to come and deploy their products and projects on us. We want people to build on us. And if they do so, we'll incentivize the user to come and try it. And then those incentives start to wean off, as we've seen with Rush. So that brought DeFi to the fore. Multiverse is focused on increasing the growth of subnets. So that's either incentives for users to come and try a specific subnet, as we've seen with DeFi Kingdoms, which is doing about 250,000 transactions a day right now. We're also building out an institutional subnet for DeFi. You might have seen some of the participants there be Jump, Wintermute, Golden Tree Asset Management, Valkyrie, Securitize, amongst many others that are also coming into that group. What the point there is that we're going to really look to provide TradFi players who want to work in DeFi with a regulated kind of permission chain where they can do the things they would do in DeFi, but with trusted and KYC counterparties, right? If you're a financial institution, you cannot be providing, liquidity to a market or borrowing when you don't know who the other counterparty is, or if that other person could be from a sanctioned country or on an OFAC list or anything of that nature. Now, in a permission DeFi subnet, you don't know who the counterparty is, but you know that all the parties in there have gone through the necessary checks. So whether it's institutional DeFi, whether it's enterprise, whether it's GameFi, Multiverse is there to help support these people by either giving them incentives to stand up their own validators so that they can run their own subnet, and that's in the form of a Vox, and then we'll give them some Vox and get that back once they're stood up on their feet. We'll do incentives like we did with DeFi Kingdoms to get users in there. So that's really the crux of Multiverse, to really expand the usage and allow builders to really come and not have that overhead to launch a subnet. We'll help them out initially until they get up on their feet with that, and then we'll get back what we need and let them kind of grow on their own. On the Culture Catalyst side, I'd love to get Ed to jump in on this as well. What we're really doing is spurring creators and artists, right? So we've partnered with a great team at Open, that's OP3N. So it's an app that's akin to a Spotify for artists, creators, musicians to really have a fan base, NFTs that are more than just art, but that link to communities that have fan access and engagement. And I'll let Ed talk about the first one that the first project there that we announced at our summit in Barcelona, and give kind of a high level as what we see coming down the pipe there.
Yeah, thanks, John. So like John said, we've set aside a co-funding opportunity for up to $100 million for this program. It's called the Culture Catalyst. We are working with Open. They have the pulse on all things entertainment. So the direct line to musicians and film producers and IP and influencers. So everything we're going to be doing is really around kind of jumpstarting that NFT community on Avalanche and really fostering the growth there and bringing in more of a retail audience as well. So the first project that we had announced at Summit is with Grimes, the singer, the producer, the director. She's actually now, with the birth of her second kid, looking to put together kind of an NFT children's book based around crypto. There's going to be a music video around that, kind of a new song she's launching. That'll be the first one that we announced. There are a few other really exciting ones in the pipeline geared around kind of the film and music industries that we're really excited about. Think about NFTs as membership, NFTs as your calling card to deeper access with some of these artists and apparel and other things that it unlocks. So we're really excited about what we're doing there.
And Ed, why don't you jump in a little bit and talk about just Multiverse and its impact on GameFi and the growth that we've seen in GameFi this quarter, because I think that's really stuck out the most.
Yeah. So my kind of core focus here has been on the GameFi side, and we've seen kind of a lot of growth over the last 2 quarters. So we've gone from this narrative of a lot of kind of these casual, like idle games, moving forward into more core AA, AAA experiences. And we announced partnerships with a lot of these really new games here. Also looking at the launch of subnets, the first 2 subnets that are going to be launching, DeFi Kingdom's already launched. We've got Cribata really close behind them, following with the launch of battle mode. So when we look at the pipeline of the different games out there, it's looking really healthy in terms of the games that we've announced and that are in development right now, as well as some of the games that are kind of stealth right now that we're waiting to announce in this quarter and the latter half of this year.
Yeah, that makes sense. And again, I think we can see that impacting all of the activity. As again, we started with this discussion around subnet developments and DeFi Kingdoms. We knew that was coming, and that went live like right at the end of the quarter. Like there's more to say about it, but in the window of Q1, it was like right at the end. I think it was the day or two before. And we actually did start to see data rolling in through various explorers as it relates to DeFi Kingdoms. So, that'll be I think a hot topic for the next quarter. The other one is Cribata. Is that how you said it correctly?
Yeah, Cribata. You nailed it.
Yeah, that is. And again, DeFi Kingdoms is part of the multiverse program at this point. Obviously, there's going to be some incentive there to continue to develop it. Can you just give us like a real high level of like what is Cribata and like, because it's generating a lot of activity on as a test net right now, but it's generating a lot of activity. Can you just kind of give us like a high level, or is that where we bring in our expert on Cribata?
Yeah, so Cribata is one of the early games in the ecosystem. At any given moment, they're taking between 15 to 40% of the gas on the C chain. So people love the crabs. It's effectively like an idle game that you need 3 of these crab NFTs to play. They are moving towards more of an Axie type battle mode game, and they've got other things planned on their roadmap that they've teased out. So people are always running looting missions and mining missions and getting tokens from that. And there's this whole economy and community built around that. So this is kind of their core game that they're launching their subnet on. It is called the Swimmer Network. So the vision here is, the reason why they're not calling it the Cribata subnet is because they're looking to be more of a publisher of games. So they're going to be launching their idle game there. They're going to be launching their battle mode game. And then they're looking to potentially bring on other titles who are looking to be on the subnet, capitalize on that community. So you can see where the economics get really interesting, where they have an inflationary token called TUS, similar to Axie's SLP, but it drives more value. And then now they have another mechanism that they can burn a lot of that TUS, and they can also take some of that and go reward their validators. And if more and more games are using that in their marketplace and for their games, there's additive value being driven to the token and the network itself.
Makes sense. Yeah, we definitely. Again, I was able to dig up some initial data on the subnets, and again, seeing it very quickly grow. So collectively, as we see more and more of this occur, we'll try to tie it back to the growth strategy that's in place, as well as how it translates into the activity and the data that we're collecting along the way. And I think DeFi Kingdoms and Cribata are examples. And I it's impossible for us to exactly pinpoint what is driving every aspect of activity. When you start to sort of timeline things and timestamp and look at how the network is reacting to it, I think it's pretty clear that there is an impact from the rollout of subnets and really the introduction of GameFi into the Avalanche ecosystem. So anything else on the DeFi front? We're already 10 minutes to the hour, so
I'll just add. Luigi's been having connection issues, but I'll just add on the DeFi front, right? I think what you really saw, and this was and this was kind of our ambition and our goal that we set for ourselves in Q4, really play out in Q1, and that was that with Rush we brought blue chip DeFi protocols on Aave, Curve, Sushi, etc. Right? That gave people comfort to come in to use it. And then we saw existing native Avalanche applications grow. We saw new Avalanche native applications grow. But what we saw really in Q1 is really the launch of new, novel projects on Avalanche that previously didn't exist or were tried to be built somewhere else. We saw some teams that were native to Ethereum, such as Ava Labs, launch their Alpha X product on us first, right? For the speed of the chain, the lower cost made it easier for people within other communities to develop applications that have launched on Avalanche, and for the developer community within Avalanche to grow, whether it be Platypus, which was just single-sided stable swap. We recently had Yeti launch. We've seen kind of the Platypus wars akin to the Curve wars, and now we're starting to see the Joe wars akin to that as well. So we're really starting to see a native community of builders and developers grow, build projects on Avalanche to continue that growth in DeFi in terms of development and new contracts. So, all the metrics that matter have definitely been trending in the right way. So we're really excited to see the community continue to grow, to innovate as the network grows.
Yeah, for sure. A few quick bits that I gathered on the DeFi front is, Platypus Finance was the fastest growing DeFi protocol over the quarter. There was what we refer to as the long tail. So the number of protocols that have a million or more in TVL stabilized. So kind of look at that as a greater distribution of TVL. So I think that's a sign of health in the DeFi space. Of course, Rush has a little bit to do with that, and all sorts of things. It also then translates into developer activity. So we saw a greater number of growth in contracts deployed over the quarter, and that's all tied into that. So we'd love to dive a little bit further into that and try to boil the ocean inside of an hour here. But let's just take a few quick minutes to one or two high level events that stand out to you. To me, the summit stands out to me. I was there, didn't have a chance to meet you all, but gathered a lot of information. What are, I guess, two of top of mind sort of partnerships and or efforts that you guys are working on? Maybe it's crimes or maybe it's these other things. And again, I'm talking about a minute because I want to leave time for some questions, as well as what's ahead, right? Nick had mentioned core. We know that that's on the way. User experience is on the way. So yeah, putting it on you to 2 minutes, more or less, what's exciting to you as of recent developments in terms of continued development and what's ahead? What can we expect? And if you can, whatever you can share.
I'll kick this off, and then I'll turn it over to Nick to talk on the product side. I think instead of two, I'm going to give you three things. I think one, what you saw was a continued growth on the BD side of the infrastructure level, and the pipes and the roads that help to build out an ecosystem. So you saw USDT launch after USDC launch natively at the end of Q4, but you've seen both of those start to grow. You've seen an expansion in exchanges, whether it be FTX or others. You've seen exchanges now on board USDC and USDT native to Avalanche. All these things, custody, staking, wallets, just continue to grow. So we're reaching more people. The pipeline in and out of the network is getting easier. Fiat on and off ramps and everything there. So that really is the foundational layer that's been growing that allows the builders to come in, for the users to try the network and to grow from there. I think the second thing, of course, is the culture catalyst and multiverse to really drive continued growth with subnets across GameFi, DeFi, enterprise. I think you saw with enterprise last quarter, I know we touched on Deloitte, but of course, Ava Labs is a partner with MasterCard StarPath program, working with them to kind of put together some pretty cool POCs, hopefully in the future, as well as Lemonade, right? An insurtech, insurance provider, to work and create a proof of concept parametric insurance program that can be rolled out globally to those that are underserved in the insurance markets, but hopefully one day can lead to the inclusion of smart contracts and blockchain technology into traditional insurance. That's the second thing. And I think the third thing to culminate the quarter was truly the summit. I think it was more a culmination of several years worth of work for us to arrive at that point. It was fantastic to see so many people. I'm pretty sure we could have had a lot more, but we're really looking forward to continuing that trend. That was our first summit, our first inaugural Avalanche event. And I think it was a great illustration of the diversity of this community, whether it be builders, partners, investors, friends, and everything across the board. So I think what you're going to see this coming quarter is really multiverse expand, the growth of subnets, and Culture Catalyst really take a leading role going from there. I'll turn it over to Nick to talk on the product front.
Sure, I'll be real quick because I know we want to take some questions. So I think we've talked about scaling. That's a huge priority for us. We're attacking that with subnets. And then the second goal is really make crypto Avalanche more accessible to everybody. How do we leverage this great technology? And that solution is in Core. And so Core really is this curated Web3 operating system that allows users to really access the best parts of crypto in a way that they can understand. Everything's native to Avalanche itself, so you're not having to add custom tokens or deal with smart contracts directly. It's really designed to really give people a comfortable experience to be able to interact with the chain. And then two other things is the bridge. So the addition of Bitcoin support to the bridge. So the ability to natively bridge Bitcoin across, you'll be able to do that through the Core extension. So we'll have bridging embedded into the extension itself to make it as easy as possible. And then finally, make it easier for the builders to get to market. And that really is expanding our partnership with AWS and starting to look to ways to deploy managed blockchains, specifically managed subnets.
Mm-hmm. Perfect. Thank you. Thank you for that. I know we're speeding up here in terms of all concepts and discussions we have to get into. So really quick, I'm going to wrap it up in like 30 seconds, try to field a couple of questions, and we'll move on. Again, continued growth, stabilization of the network across metrics and across the ecosystem. We saw the EVM custom subnets kind of roll out, things that we didn't mention, partnerships with other protocols like Terra, partnerships with enterprises like Wildlife Studios, DeFi Kingdoms launching, like a lot going on. So, I guess for the folks that aren't terribly familiar, take a look at the quarterly report to get more detail, as well as all the resources that are out there available to the community. All right. So quick, going to try and take at least one question if I can figure out exactly where they are.
Yeah, let's grab some questions.
Oh. How about that? I'm still sharing, aren't I? There we go. All right. We can squeeze into, we might go a minute or two over. All right. Let's see. I think Terra is one of the main competitors for Avalanche. How does AVAX plan to compete with Terra, and especially its stablecoin? Does Avalanche plan to release its own stablecoin?
Can you repeat it one more time, James? Sorry, you cut out for me in the beginning.
Sorry about that. So I just mentioned Terra. So I think Terra is one of the main competitors for Avalanche. How does AVAX plan to compete with Terra, and especially its stablecoin? Does Avalanche plan to release its own stablecoin?
So that's actually a great question, for the simple reason that, there's a narrative out there that L1s or other L1s have to be competitors, and we don't see Terra as a competitor, right? We're all in this to grow this pie in this industry and this entire ecosystem together. That's why we partnered with Terra, right? we partnered with Terra, as you might have seen in the news. And Avox is going to be backing UST through that purchase. Luigi can jump in and give some more color on that partnership. But we don't have any plans on launching a stablecoin. Why would we, when there's a great one out there that we can partner with and help solidify? So Luigi, do you want to jump in and talk a little bit about that?
Yeah, sure. Sorry for the issues again from before, but yeah, I mean, we obviously had this very large announcement with respect to Terra, and Terra's main goal, is, at least from my conversations with Doe and that team, is to grow UST adoption. Terra is a zone of Cosmos, that is the chain that they do, and Luna is the staking token of that zone, which helps secure the network, right? So that inherently drives some value to that token, which helps it secure for the stablecoin. From our standpoint, we have one of the most robust DeFi ecosystems out there, which is obviously attractive for a decentralized stablecoin. And so the partnership really makes sense from both sides, right? The DeFi ecosystem that needs a decentralized stablecoin, and then the decentralized stablecoin that wants to be integrated within a very robust and diverse DeFi ecosystem, which Avalanche has at this point. So I think it's just a natural fit from that lens.
Makes sense. Yeah, I mean, you mentioned last quarter, John, that it's really not about a competition. I think even in my report, I called out a competitive analysis. That's more of a traditional way of evaluating this.
Of course.
It's more of like a peer group. Everybody has their own place, and it's all about driving things forward. And of course, a lot of the credit go back to to Ethereum and the Ethereum community. So we are at time. I wish that we could ask more questions, but I know that you guys are super busy, and want to be respectful of that. So next time I will be a better moderator and try to leave a little time at the end for questions. And of course, I would say to you all and the community and all of the audience, wide open to feedback. Any metrics aren't in this report, anything that you would like to see, questions that you would like to ask, we're wide open to that. And we'd love to continue evaluating and just continue the conversation going forward. So, with that, thank you all. Thanks everybody for joining. Thank you, team, for joining us. It's always a pleasure chatting with you guys. So that's where I'll leave it. If you have any last words, you have another event that you'd like to invite us to, let us know.
I did wrap up the last crowdcast by inviting everyone to the summit. So I wish we had another summit coming up right away, or else I would. But we actually will be doing a very big activation in July around the Formula E race in New York. It'll be in Brooklyn. We are New York based. We're Brooklyn based. So we will be doing some really cool activations around that. So stay tuned for an Avalanche House in July in New York. Hope to see you all there. And thanks, James.
Awesome. Thank you, guys. Take care.
Great. Thanks, James.
Thanks, guys.
Bye now.